Hello, everyone. Welcome to another episode of the Blacklist Sessions. And today I have who is possibly one of the greatest finance brokers of all time, because I use him for my stuff. But over here we have Cameron from Rion Capital. How are you, mate?
Good, man. And yourself?
Going really good. So I was keen to hear a little bit more about your journey and how you got into finance broking and pretty much your backstory.
Mate, look, thank you. And thanks for the wrap. Appreciate that. Mate, I've been in finance now, it's coming up to about 25 years. Sort of started out working for the major banks, a couple of smaller private lenders as well. Predominantly it was always in that commercial business lending space. I actually specialised in a niche lending market in Australia in trade and working capital. And I did a little bit of a stint over in the UK as well, working as a relationship manager. And I came back to Australia with a lot more knowledge. And through that, I kind of, was introduced to the banking systems and what have you. And then through that, trade and working capital, whilst it is a big part of Australia, it's also very niche. And we love nothing more than property, right? So I wanted to get a little bit more knowledge base on the actual property market. So I became thrown into the sort of mainstream banking relationship area where I managed a portfolio of clients. And through that introduced me to actually managing all different needs for business clients. So that meant trade and working capital, but also meant their property, both for the business and for the directors and the shareholders as well for their private wealth strategies. And I hit 40. And I wanted to do something for me. I was fed up with sort of working for the banks and just being a number. After that, I had a friend who was a broker, said, come and work for these guys. I did that for 12 months. And after that, I thought I was ready. So I started up Rion Capital about 4 years ago.
Fantastic. When you went overseas, did you notice that there was anything different as to how they did finance as to opposed to Australia?
Oh, that's a really good question. My UK experience was largely focused on business lending. Over there is all very relationship driven. They are very sales, very much mentality of do not lose a client, keep those clients, and those clients that you have, protect. I lost one client in the space of 3 months. And they basically sent me down to the CEO's office. He basically said, pull your head in or we'll send you home. We'll put you on a ship and send you back. So that was a bit of a realisation of, okay, do not lose clients. Whereas in Australia, we have a little bit more of a relaxed approach to it. It's like, we had a good run kind of attitude. But for the next 9 months as part of my contract, I did not lose a client.
Okay, so you started your business here in Australia, and what was the thought process behind that? Because most people, when they start a business, they're thinking, I want a bit more freedom, I want to sort of do life on my own terms. What was the thought process behind all that?
There was a lot. Yes, I wanted a little bit more freedom. I was doing a lot of travelling interstate, back and forth to the city every day, and I had a young family. I was doing a lot of traveling, but also I like to be able to help people. It's a bit of a cliche, I get it, but I find when you're stuck with one particular lender or one particular bank, you're only sort of able to apply their policy. So sometimes, and a lot of times, I was actually giving advice to people that I can't help them. Whereas I really wanted to find a solution, but I was governed by what I had. Whereas as a broker, I have the tools to be able to find a solution. If I can't find it with one lender or one bank, I can go this direction and find a potential solution for the customer. So it's being a little bit more broader in terms of the scope of what I can do. I like to get my hands dirty and get involved. And I just found in the banking system, I was stuck a little way.
Yeah, it makes sense. So a lot more flexibility, I guess.
Yeah.
Yeah. Oh, that's good. So I guess we can talk a little bit more about the current economic environment, because it's certainly been a very interesting one over the last couple of years, between whipsawing rates all the way down to 0.1% at the Reserve Bank, all the way up to, I think it's like over 4% now, the cash rate. So I noticed that you actually called that there was going to be interest rate increases when the rest of the market, broadly speaking, was saying, probably going to get some rate cuts. But I remember a couple of conversations we had a year or two ago, you were like, I don't know about that. I think we're going up. So I was really keen to hear your thought process into, why you thought that was the case.
I was at that particular time, I think I was more, I reckon they're going to be a little bit flatter than what everyone else was thinking. Everyone was pushing towards rates are going down, rates are going down, rates are going down, and that's because that's what the media was feeding it. And yes, there was that drive. I actually had a bet with one of my accountants about how much the interest rates were going to reduce over the next 12 months. I won that bet, but. During that period, I just thought they're not going to go too aggressive on interest rate cuts because we saw what that did during COVID and how that actually pushed housing prices in particular to go further up. So I was just a little bit more cautious. I was following more what the economists were saying rather than what the media was wanting them to say.
Gotcha.
Yeah.
Well, it turns out you were right. So.
I'm not always right. There was a couple of times when I was hoping for holds and we've seen an increase. We'll see where we go. But we got another announcement coming out tomorrow.
We do, and hopefully with a bit of luck, this will be out before tomorrow.
Oh, don't hold me to it.
We'll see how we go. But I think we're very much going to see an increase. I know that there's a lot of pressures around fuel, but I know that the RBA will be looking a little bit more broadly at the economy rather than just a spike. But I think there's that much increase in prices in the system that we're probably going to see an increase.
Yeah, look, I don't like our chances. Again, obviously, a lot of the media has been pushing for there's going to be an increase, but we'll see what happens. The economists as well have been saying that there's likely to be an increase. But to your point, when you talked about the more broader economic stance, it's not just the CPI data. Yes, we saw that spike, but a lot of that was actually driven by the Iran conflict and what that's done to petrol prices and what have you. If you look at the trimmed mean inflation, it's actually more around 3.3% as opposed to the 4.6% that we experienced, which is in line with what the US and the UK saw. And their reserve banks held interest rates. So with any form of luck, I'm hoping that after the back of 2 interest rate rises, that maybe they'll just say, let's just see what stabilisation looks like a bit before we jump up again and start putting that pinch, because people are really starting to feel the pinch on their discretionary spending. So
yeah, you reckon a little bit of a wait and see attitude, eh?
I'm hoping for a wait and see attitude.
Mate, so am I. So that's great. So on top of that, we've also got a lot of action around the federal budget coming up as well.
Yeah.
What do you reckon's in store around finance for that, whether it be changes to the tax policy or lending or anything around that?
Yeah, it's going to be an interesting one. I think there's been a lot of noise around investment property owners and what we're actually going to see out of that. There's potential that we're going to see changes to capital gains tax, but also negative gearing on investment properties as well. So I don't think there's going to be a big, broad brush sort of change. And I don't think any changes are really going to have a massive impact, particularly on existing investors, but potentially for new investors getting into the marketplace. But it's not necessarily a bad thing. I think what they're trying to do is obviously just stabilise the investment or equalise it really between that generational gap that we have in our wealth at this point in time. And it's going to hopefully sort of, make it more of an even playing field for the newer buyers coming into the market that just can't afford.
Yeah, I think it'll certainly be interesting. My read on it is that I find it really ironic that just as the millennial generation is going to be able to start using negative gearing and the capital gains discount,
they take it away from us?
No, no more. But it is what it is.
Look, I get it. Yes, it is annoying as an investor as well. But I think what we're also going to see is that it's trying to stabilise pricing and hopefully not push pricing on properties up as high, because it's the people who've got the pockets who are buying the properties and pushing the younger generation out. So the idea is to hopefully just stabilise. This is my take on it anyway, and I'm not an economist, but I think the reason why they're doing it is to try and just stabilise pricing so it's not going on up and up and up as fast and rapidly as it has been over the last few years, so that the newer generation can get into the market more.
Yep, it makes sense. So on that front, so let's say I'm 25 years old, right, and I'm looking to get into the property market for the first time.
Yep.
As an investor or a first home buyer, what should I be looking to do to get finance, and what should I be aiming for in terms of deposit, things like that? Like if someone came to you for the first time, was like, I just want to get into property, what do I need?
Yep. Look, A lot of the time as well, people are doing research through AI and Google. Don't have a conversation with Dr. Google. Go and have a conversation with someone who actually works in the industry or knows what they're actually talking about, because you don't know what to ask, and it's our job as the expert to basically ask pointed questions to actually determine where our options actually lie. The first thing you want to obviously get an understanding of is, what are you entitled to? There's a raft of different government incentives and schemes available to particularly first home buyers these days. The hard part is keeping up with all of the changes, because they're changing it all the time. But you want to have an understanding of what sort of things am I available to? What's the first home guarantee? How does it work? What are the stamp duty calculations and how does it work? Where are the limitations? How is it going to apply for me? How much money do I have to have as a deposit? And all circumstances change, because how much you need as a deposit can also be driven by how much you have to demonstrate to the bank's serviceability and that sort of thing as well. What does gifting mean as well? Because a lot what we're actually seeing in that generational pass down is family members or parents in particular providing their kids with gifts in terms of lump sum or using equity from their property portfolio. But you also want to understand that, because even though you might be receiving a gift, you still need to demonstrate, perhaps if you haven't been renting, 5% savings.
Yes.
So you want to understand all of those kind of rules as well and how it works.
Gotcha. So you got to be able to show savings. When someone comes to you, you need to be able to show your income as well, right? So they need a PAYG slip or something.
Yeah. So pay slips. How long you've been employed, what have you been doing, do you get bonus as well, how often is your bonus remunerated, and what other liabilities do you have. If you have never actually taken out debt, then that's going to be a bit of a stumbling block, because you don't have a credit file. So we need to establish a credit file first. Because the banks actually want to see, particularly if you've never rented or anything like that, that you actually have capacity to meet your obligations. So it's an understanding of that, and without a credit file, it's hard for them to obviously determine. Yeah,
that makes a lot of sense. So for most people that are working a job, definitely PAYG, make sure you've got pay slips. But for someone that's self-employed, which is an area that I know that you specialise in, what does someone need to be able to get a loan? Because I remember I was in this exact circumstance when I got my very first loan for this house that we are sitting in. I'd basically never really worked a job. I'd done a little bit of high school teaching and stuff like that, but most of my income, I was self-employed. I was running my video business. So it's a bit of a different process, isn't it?
Yeah, look, really good question. Whilst there are a lot of brokers in the marketplace, not all of them know how to deal with self-employed. And the self-employed process is a little bit more detailed. So it's about how long have you actually been in business for, what tax returns do you have, how up to date are you with your tax returns, how have you structured, are you self-employed as a sole trader or are you a company? And that's something that you and I had some experience with as well. So it's obviously about actually being able to read through financial statements, tax returns, P&Ls, balance sheets, those kind of things as well. And then how do you actually understand the distribution of that income?
Yeah, because I guess that's one of the big advantages of working with a broker, is because they can actually take the case to a lender and say, well, look, we've got some income here, we've got some income in the business, and it's a little bit more of a holistic picture that they can provide to a lender.
Yeah, well, particularly in the self-employed space, there's a raft of different policies. PAYG is pretty standard. There's not a lot of difference that you can actually take. There's different ways in which they calculate things, but with self-employed, there are different policies that we can apply for different circumstances and different ways we can calculate income as well. One big difference is, for instance, if you've been trading for a couple of years, we can use what's called 1 year in isolation. 1 year in isolation is just looking at one particular year's financials, as opposed to what most banks like to do, which is looking at 2 years' financials. And if you've got a really good year in the most recent year, then we can use that rather than using the last twos and taking an average view. Or if you are a company and you're paying yourself a general sort of wage, and we can demonstrate that over a period of time, we can and we don't need to actually see the company financials. We can take that PAYG payslip and use that as a verification of income if we're able to show debt servicing.
Gotcha. So there's certainly a lot of different ways to skin the cat.
Yeah, absolutely. One thing I will say as well, Jay, if you are looking to actually go from being a sole trader to a company entity, as you might remember, make sure you get your timing right.
Oh yeah, I absolutely got screwed by this because we moved to a company and I was looking at getting a loan for investment property, and sure enough, I had nothing to show with the company because it was a new company. So that was incredible. So we had to wait a little bit of time to get that 1 year isolated financials again.
Yeah, but we got there in the end.
We did.
It was just about working the strategy and understanding what the circumstances was, and then we go, okay, we'll have to visit this in, I think it was another 5 or 6 months. Yeah,
we got there, which was good. That 5 or 6 months worth of growth would have been nice, but it is what you can't win it all, right? You can only win most of them. So let's say we've got a single person or a couple, and the major lenders have said, look, you just don't quite have the serviceability that we're after, or you don't quite fit, the mold that they're looking for. What other options are available to either a single or a couple to actually get financing for a property?
So outside of the banks, there's actually people don't actually realise there's like over 50 or 60 home lenders in the Australian market. It's probably more than that. We're accredited with over 40 of them. And borrowing capacity calculators aren't the same across the board. So it's about understanding each of them and their policy and actually testing it across a number of them to actually go, well, what's our strategy here? And the strategy isn't always about getting the best interest rate. And you want to get a good interest rate, obviously. But the strategy may be about, well, which lender actually aligns with my objective? And if my objective is to get to this pricing point, if I can't do that with a major bank, are there other lenders who I can actually do it with? And it might mean that you have to pay a slightly higher interest rate to get there, but if that's what the goal is, then we can come up with ways in which we can manage that. Yeah,
and I think sometimes that's definitely worth it. Like even within my own experience working with you, the latest property that we got up in Narang was a commercial one, which I was fully capped out on serviceability, both personally and company. But there's other ways that you can do things like a lease stock loan, for example. So what's maybe some of those alternative ways that you can get financing if things don't quite line up?
Well, so if I use your case, so you were on the hunt for commercial property. And whilst you can buy a residential property through a company, you can't necessarily do things like lease stock and what have you. It's a little bit different. So one of the options was you wanted to get into commercial property. We had a fair amount of equity that we were able to use from the residential portfolio, and we were able to extract cash from that to be able to put into your lease stock arrangement or into buying a commercial property. And the way a lease stock facility works is it's really just based off, can you demonstrate the serviceability purely on the income that lease is actually producing? And so it is a different way in which you can do it. There are different options. It depends on what your ultimate goal is. So if you do want to get into property, commercial property is a bit of a different beast to residential. I think particularly as you're starting out, you might want to consider getting into resi first and then making the stepping stone into commercial, because there are different games and there are different rules and there are different costs as well, as you may have sort of experienced as well. But you can get other benefits. You can get more longer term lease agreements, more stable flow of income. Not always, but most of the time it's a higher rental yield. So the income generation is a little bit better as well, and depending on the location. But there are sort of ebbs and flows that can come with commercial as well.
Yeah, definitely. I think in my experience, starting in residential is definitely the way to go, because you get in with lower deposits, which means you can use leverage to grow your equity base. And then over time, you can move into commercial, which typically demands high deposits, which is usually the toughest part for people. Yep. I mean, take like a $1 million house versus $1 million commercial property. For a house, if you're a first home buyer, you can get in with like 5% in some cases. That's like $50,000. But if it was a $1 million commercial, then that's $300,000 plus all your costs on top of that. So it can certainly be a lot more challenging for someone starting out.
It's certainly there isn't as much appetite to be able to do your 95% lending. Certainly for commercial as well. So it is a little bit of a harder place to get into, and you need to have a little bit more extra cash in your belt to sort of absorb some of those added costs like legal costs, and what have you.
Yeah, definitely. I think in some respects, if you buy the right commercial property, it can be a lot more secure than even residential. Because people talk about like the turnover of like residential and all that, and it's really easy to get tenants, which is true. It's certainly a lot more difficult to get tenants for commercial, but if you buy the right building, you can have a tenant in there for like 15 years.
Yeah,
that's just locked in, and you got income just coming through.
You can also do a little bit more research about the tenant as well, like how long have they been in business. I think that's an important part as well. What do they do? How secure are they? For instance, if they're a lawyer and they've been around for a little while, you know that there's generally okay for cash flow and that sort of thing. But if they're a new sort of to business, you want to get a little bit more of a feel. You might want to sort of shorten the lease term and that sort of thing. But it definitely gives you more capacity to be able to get insight into that actual customer.
Gotcha. Well, that makes a lot of sense. So one of the other things which I think is under a little bit more of a microscope, this budget, is entities and structuring. So whether it be trusts, companies, or sole traders, or in your personal name, whatever it may be.
Yep.
What can people do in terms of structuring to be able to borrow what they need to borrow? Like, do you think is there obviously it's different for everyone, but is there like a different strategy that might work better for a certain type of person when it comes to structuring?
So it really comes down to the individual and what are they looking to achieve, and also their conversation that they have with their financial advisors and tax accountant, for instance. So you can structure things differently. You can do it either in your name, or you can do it through a company or through a trust. It depends on what your goal is in terms of asset protection and tax footing at the end of the day.
Gotcha. Yeah, makes a lot of sense. So we can talk a little bit about asset finance as well, because you do not only property, but also equipment. Like if someone's looking to start a business, do you have some examples of some of the things that like people have financed and how that's actually been a good decision rather than just like taking all of their money and just plonking it into something?
Yeah, and look, this is probably an area that businesses and people looking to start a business probably need some really good advice. So we've done things like cars, coffee machines, things like, one of the first asset finance applications I ever did was like a post rammer for a farmer who, or a guy who was working in mining, and he has started his own business, putting up fences around rural areas and farming and what have you. And so that was a really interesting one. I hadn't done that type of transaction before, but I've also done simple things like that, but also on the larger side where I've got a client at the moment who is in food wholesaling, but they're actually transitioning from wholesaling into actually manufacturing it here in Australia. So the majority of their goods were actually being imported from Mexico and the US, and they've gone through the exercise of actually looking at their returns, and with the costs of things coming out of the US and Mexico at the moment, they just thought it was no longer feasible for them to operate under that structure. So what they did was, we're going to change into a manufacturing and business. We're going to produce here in Australia. So they've actually gone and purchased about $5.5 million worth of equipment to actually get that up and running. And that takes a little bit of specialized lending. Even when I was dealing with the bank manager didn't even know what I was talking about. So part of it was we had to do what's called an import lease, because some of the equipment was coming from Germany and some of the equipment was coming from the US. And in addition to that, we did some asset finance for some of their local purchases as well. So we did a $3.5 million import lease and an overall master asset finance facility for $5.5 million. And we're now starting to put the transactions through that as their equipment is coming from overseas. The idea is that we fund the trade to get that good into the country. Then once it's actually here, installed and commissioned, and then converts into asset finance. So that's a really meaty one, as opposed to just getting your car, getting equipment, getting IT equipment, getting cameras, all that sort of stuff as well. So
how do you explain that to the bank? Because bankers are like good at one thing. They're good at banking. They're like, okay, I know numbers. How do you explain a business case like that to a bank so that they go, okay, it actually makes sense to me. We'll do the deal.
Yeah, it's about having the right contacts. And banks have specialist areas that deal with this kind of thing. Some banks are better at it than others, for sure. But part of my job is communicating that to the bank in terms of how we should structure this, and then trying to align it with their product and their product ranges. So import lease is something that the banks do. But not every banker actually even knows what it is. Most bankers obviously understand property. That's not a problem at all. But when it comes to more specialised products, they've got specialised areas or specialised managers that are there to actually assist them during that transaction. So I have a direct contact with my BDM, but also my BDM then puts me in touch with the specialist area. So that would be the asset finance person in that case, and also the trade and working capital specialist who'll do the import lease and the trade finance component as well. And then all of us have to work together to structure it, to put it together for the client, and then the bank manager we help the bank manager along the way.
Gotcha. So when it comes to financing equipment, like with your business or property, there's essentially no limit, is there? As long as the serviceability is there.
Serviceability is a key thing, but there's also, if you've got a strong business case, particularly if you're starting out in business, all right, a lot of people come to me and they say, I want to start a business or I want to buy a business. Fantastic. And they have a lot of ideas in their head. The way you're going to buy the bank in is to have a business case and actually write out a business case. Have a marketing strategy, write out a marketing strategy. And also looking at your financials. So if this is going to work, what do the financials look like? If you've got financials now that we can leverage, great, that's fantastic. That's a starting point. But what does the next 12 months, 24 months, 36 months actually look like? That's where you're going to buy the bank in. So that's the advice that I always give my customers whenever they're coming to us. Particularly if we're dealing with a major bank, have these things available or let's start working on them together. Lower tier banking, not as much. We still need to obviously prove that there's a business case. We may be able to put that together, but normally most of this is already in the person's head and they don't necessarily know how to put that down on paper for the banker. So this is where I kind of help them to do that.
Yeah, basically the communicator, the translator.
yeah. It's about storytelling. Banking is really about storytelling. And as long as the people on the other side of the table actually understand the story and the better they understand it, the more that they can sell it to the credit manager. And as long as the credit manager has confidence that the banker has an understanding of it, then they're going to feel more compelled to want to do the transaction rather than not.
That is an incredible clip right there. On the short form, that's going to be the piece. Banking is storytelling. You've heard it here first. Fantastic. So that is great. We've covered a lot of ground there. Is there any other areas that you think would be quite useful to anyone that's listening to this podcast around like financing or, how to take the first step or anything like that? Yeah, look, absolutely. I think the first step is surrounding yourself with people who you feel confident with or are going to help you get to the right destination. Where we at Rion Capital specialise is we specialise in obviously self-employed, and it's all about providing them with a relationship managed service that you no longer get from the banking community. Particularly if you're borrowing less than $3 or $5 million, you no longer have that contact point at the bank where you can just pick them up on the phone and say, hey, I need advice on something. They can't do that for you anymore, or they just simply don't have the head count to be able to do that. Haven't got the resources. I actually noticed that as soon as I started borrowing, kind of where I'm at now, the relationship from the bank, they started calling me a lot more. They were like, hey, we actually want to talk to you now. Yeah. Oh, the more money you've got with them, obviously, but if you've only got if you've got one property, you're just another home lending customer. And if you're a self-employed business and you're relatively small, in particularly as you start, the best you're going to get is what they call a business banker at the branch level. And to be honest with you, not having a go at some of the branch managers, they're just glorified home lenders. So they don't really know how to actually give proper advice to businesses and how to actually get starting unless you've got equity. Then they just take the equity out of your home and put it into your business. And that's not necessarily the best strategy either. So you need to actually surround yourself with a good accountant, a good lawyer, and a good finance broker who actually understands how the banking system works. Yeah, I think that certainly became apparent to me as I started wanting to do more and more in the property space, is having the right people. And it took me a little while to get the right accountant, actually. Yeah. I think I went through 3 before I got to my current guy who loves the government just as much as me. He's fantastic. But yeah, I started with someone that my family was using, and there are a few pieces of advice that he actually recommended to me. Yeah. But I actually thought a lot deeper about it and went, this is actually not good advice. So I actually had to go through another person and then eventually got to the guys I currently work with. And it was quite similar with the mortgage broking side too. I went through a few and they were fine, but they just didn't have like the depth and the knowledge that you had. So it was really great that we managed to team up.
And you found me on social media.
Yeah. The power of social media, right?
I need to do more. But no, look, you're absolutely right. And I went through that journey as well with my accountant. So I had a great accountant for years, and we were friends as well. He was a little bit more on the conservative side, and that suited me perfect for about 10 or 12 years because I was a little bit more conservative as well. But at the time when I started to take on a little bit more risk, I found that our agendas no longer aligned. So I needed to have an accountant that was perhaps more prepared to give me the advice that I needed for the journey I was taking. And no disrespect to my previous accountant, great friend, and I'm still in contact with them, but my new accountant was more in line with where I needed to be.
Totally, yeah, because there's so many different ways that you can do things. Like I remember the initial advice that I got from my very first accountant where I was starting to earn pretty decent money. I think it was about $150,000 that particular year.
Yeah.
And he took a look at it and he said, look, just stay as a sole trader, mate. It's just going to be too complicated.
Too complicated,
mate. I don't mind being complicated. And then I went through another one and they sort of said a similar thing. But the business started to grow more and more. And eventually I got to my current guy. He knew it was like, right, okay, you're running a business. You need to make sure you've got asset protection primarily. And we need to be setting it up like this, blah, blah, blah. And it just went on and on. And that was at the point where I was like, okay, this is actually good advice. This actually makes sense. And he could explain it really clearly.
Yeah, and look, from a lending perspective, if you want to do more things in the business, if you're running it as a sole trader, you're immediately on the negative conversation with them because they want you to be a company, because then they can actually have more. Because if you're a sole trader, you're still it's still small business lending. Like there's not as much options in that sort of space as there would be in a company. So I'm not an accountant, so I'm not going to profess to know much on the tax side of things. But if you're turning over a certain dollar figure, why are you still doing it as a sole trader going forward, particularly the dollar figures you're talking about?
Yeah, that's right. Particularly on the tax front, but yeah, also like in terms of like asset protections and things like that. You've really got to be on top of that as you start to accumulate more because people come out of the woodworks. That's for sure.
And you're not the only one to sort of go back through that journey where they've elevated from being a sole trader to a company, and they've gone, okay, well, now we want to get money, but we're going to have to sort of go through a bit of a strategy here and some timing until we can actually start doing things, or register your company sooner rather than later and get that journey started. You don't necessarily have to trade out of it yet, but just get the ABN and the ACN up.
Yeah, and the other thing with that is it's really important that your finance guy and your accountant are working hand in glove to get the outcomes that you want. Because just like if the communication's not there, then you might not be able to get what you want quite across the line. Yeah,
and look, we work with a lot of accountants, so that's the majority of the work that we get is through our accounting network. And a lot of the time, they're just happy to find a broker who really knows the market. There's a plethora of home lenders out there, so they've always got someone. I can tend to get a lot of more complex transactions, which is fine. But
sorry.
You're not as hard as some of the other ones out there, man. But I also want some of the the easier ones to sort of deal with just to keep the cash flow burning.
Life's about balance.
I know. But that's my way in, is to sort of show them that I can deal with pretty detailed, structured lending and help more difficult transactions find a solution rather than not. So I tend to get a lot of those, and that's my foot in the door, and that's how I sort of help them and their client base. But then once I've actually helped a couple of their customers, then they start to feed me more straightforward transactions at the same time.
Totally makes a lot of sense. So yeah, if you're looking to buy a property, whether it be residential or commercial, you're looking to finance equipment, how does someone get in contact with you?
Yeah, check us out on our website. So rioncapital.com.au. Rion is RION Capital. They can check us out on Facebook, or they can chase us up on our phone number. It's 02 9615 9889. My receptionist, Renee, would love to forward your contact details through to me.
Sounds great. Where'd the name come from?
Ryan. It's actually a shortened version of my son's name, actually. His name's Riley. Riley Finlayson. So it's the R-I and the O-N and sort of put together.
Love it. Oh, well, thank you, Cameron. It's been very insightful, and I've learned a few things, and I hope everyone listening has learned a few things too. That's pretty much it.
Thanks, Jay. Appreciate it.